Hey guys, Vladimir here from Home Trader Club. In this video, I want to share with you the top Forex trading strategies that we implemented in February 2025. Where in Home Trader Club trades. As you know, market conditions vary. Since Trump took the administration, the market became hectic in many ways. I would say even stable, the opposite of state, or the complete opposite of stability, and less technical. Even for the technical analysis, many times, especially when you rely on market structures and not just some indicator crosses and things like that, the conditions tend to be trickier. And yet, if you remain loyal to your trading rules, to your trading plan, at the end of the month, you will actually be making profits. And in this video, I want to take the opportunity and to explain three of our best trades that we did in Home Trader Club during February 2025. Before we begin, I would like to take the opportunity and to say big thanks to 8K Broker for continuously supporting our community, this channel, and our members, and to continue and enjoy the amazing offers we have with 8K Broker, including the access to all of our trading systems, the trading indicators from the marketplace, the access to Home Trader Club up to 1 year, private mentoring sessions, and more. Follow the link below this video in the description. So to present the trading strategies, let's go to inside the members area of Home Trader Club and scroll down to our trading journal. This is where you are able to track record all the trades as they are published and as they are followed up and updated in real time. Here, and of course, our dedicated Telegram channel. So February, we had, let's go back to February, which starts here. We had 6 wins, 3 losses, a few break evens, and some cancelled pending trading plans. And these statistics helped us to maintain our long-term high accuracy of over than 70%. There are months where we go below this average. There are months where we are way beyond the average, and these statistics is basically over the last many years. You can find all the information on the website, of course, hometraderclub.com. So I'm not going to explain all of the different strategies and the trades here we took. I will be showing some 3 trades here to explain which, from my point of view, the most relevant trading strategies to trade in not stable conditions like we are facing the first quarter of 2025 when it comes to technical analysis. Of course, some methods could be more stable, some methods could bring much more accuracy, some less, and that's why I said at the beginning of the video that market conditions vary, they change. Sometimes we are in clear trends, sometimes the momentum is so strong in a given trend that you are simply, you don't have the chances to join this running train, I would say, right? This running momentum. So not always every method would be performing the best. In super trending markets, the reversal strategies would be trickier. In more flat market, the trends and trading strategies would be trickier. So it's very important to be able to identify that, understand which conditions you have, and see how you implement that. So all the strategies you would see here, you are able to find inside our media zone under the section of webinars, of course. While I would recommend to watch all of the webinars here, especially when it comes to cycles, these two are key webinars to watch to understand how, when, and why do I implement the trading strategies that you will see in this video, and understand the terms and the rules of strategies. And of course, you would continue and see them in real time as we publish the trading opportunities in, again, real time in our members area and our dedicated channel. So let's begin. Let's go to the trading journal of ours and let's see some of these trades. The first one is basically gold, where we are looking to trade short term. This becomes our trigger zone, which I will explain in a moment, and 23.6 Fibonacci of this 4-hour chart cycle becomes the first target zone. 38.2 becomes the second target zone. It's basically 38.2 with the previous lows, which again I will explain in a moment. Okay, and the logic here is after that we expect the gold to continue, make final peak on a daily chart before a longer term reversal likely will take place. So I want to take this and explain the strategy, why it was implemented the way it was. So here we are at this very point. This is where we predefine the level, and the logic here for us, as soon as we got the break, retrace, and the continuation down. That's what we are looking to trade. As I showed you there, the targets for us were the 23.6 and the 38.2 zone, while the 38.2 zone was basically the combination of the previous demand area, this inner consolidation zone where the buyers were accumulating the positions, and then they explode to the upside. So these two became our target levels. Okay, so why at all was that a sell in that case? So you can learn, by the way, more here on the right top corner. I will put the link to the video where I am presenting and explaining this strategy a little bit more detailed. But one of the most powerful technical signs I love to see is, and I will go a blank screen for that, is when we are facing a sequence of false breakouts, sequence of fake highs. In the trending conditions, you got, let me just take that, this, in a sequence of a trend, you got higher highs, higher lows, and then the one at some point the high is broken, but it becomes to be a fake breakout, because after the break the market retraces down back to below this high. So this becomes fake one, and the same happens afterwards when you get another attempt to make a high, which instantly retraces below this high. That becomes fake 2. And the most important part is that while these fake highs are happening, what I want to see on the indicator MACD moving averages is a bearish divergence. While the market is making lower highs, while the market is making higher highs, the indicator is making lower highs. Clean conditions of a conversion, of a bearish divergence, sorry. So beside that, what else did we have on the gold that leads me to the conclusion that we expect to see this retrace before final peak and then a move down? Is basically very simple and straightforward. First of all, take a look what happens at that peak with the RSI. We are bouncing off an overbought market conditions, close to 80, while the next peak is below the previous peak, which makes a bearish divergence on the RSI at that very peak. Besides that, if we go to the weekly chart, at that point, gold already begins to develop a potential bearish divergence by itself. So, while the daily and the weekly hint that some slowdown is building up, the 4-hour chart basically makes these two false breakout I mentioned at the beginning, right? We got a fake attempt to go above this high, which fails, then attempt to go above this high, which fails, and all that happens under bearish divergence condition. Classical technical condition. Then what we want to see is basically the reversal signs, lower lows on the chart and lower lows on the MACD histogram, flipping the momentum from the bullish trend of higher highs, higher lows to the bearish momentum. And the thing then is, of course, the broken support becomes a resistance, and the last high acts as supply. We want the market to get in, get the rejection, and that opens up the door for our sell. Target level, this demand zone, of course, broken resistance becomes support. This becomes the first target zone, and the 38.2 with this demand zone and this inner zone becomes the next target zone. So this is exactly how the gold was working. We got the 23.6, then we got towards the 38.2 to reach the previous demand zone, as I just showed you. I would say fulfilling, sorry, that's not the pound, here, fulfilling basically the classical trigger we get here based on the reversal and the convergence setup. So this was the strategy which I called for the reversal conditions on a short term, while 23.6 Fibonacci level acts as the first target level when the higher time frames still not completed the trend, and we expect to see further continuation. 23.6 has the value, and the next key Fibonacci level with demand levels, of course, is basically the 38.2. Now let's talk about the second strategy. But before that, I would like to remind you that during the week you can enjoy amazing opportunities that my team shares with you in our blog. Go to VladimirRibakov.com, and here you will see we are publishing great trading opportunities during the week. For example, this Euro-Yen buy idea, where we were expecting to see retraces and then continuation. Take a look in the charts, you would see yourself what happened. And also you would go to Forex education section, free ebooks, free tools, everything is available for you in our blog. The next trade I want to explain is the Euro Pound. Classical range breakout strategy, but with some specific rules. For easier implementation, for higher probability. So this was our trade here. Let's take a look on the Euro Pound. Let's try to understand what happened here. This is our breakout we were looking at, right? So the range breakout, especially when it comes to like triangle sort of consolidations, is something that you will be able to do in ongoing trending momentum. At that point, when the trade was shared, let me just remove this Fibonacci. At that point, when the trend was shared, the idea is pretty straightforward here. We have sequence of lower highs, lower lows on the weekly chart, and we do not have any signs that the trend is over. As we got the bounce back to the upper boundary of this range, our expectations was to see further continuation down. And when we go to the daily chart, daily, after some attempt to make a bullish run, bounced off this amazing supply zone. Take a look on this peak here, where you can see for how many candles in a row there is an upper spike on the candles here. Basically hints that the sellers reject the buyers very seriously. And when you go to the 4-hour chart, the price structure speaks for itself. We got here on this drop a sequence of lower highs, lower lows without any sign it's over. It's lower lows on the chart and lower lows on the MACD. There is no bullish divergence yet. Therefore, our expectation is after the correction, continuation. Correction could be in ABCD or a range. Any structure comes and very welcome. There was some early sign of a bearish hidden divergence while the market was making lower highs. The indicator was making higher highs. This is a bearish hidden divergence, a first sign of continuation, but our strategy that I implemented here was the break of the range. Not because I knew that the range is coming, but because this is how it was developing and developed a great opportunity. So, trending conditions, and please watch this video here. I show and explain there more about joining ongoing trends. And that's one of the ways I love to do so. ABCD breakout, orange breakout. So 3 waves. Now here comes the trick with the ranges. We want to see at least 4 spots, right? While the first spot should be in the ongoing direction. So in that case, bearish trend. So it should be low, high, low, high. That's 4. And then on 5th spot, we want to see the breakout. Spot number 5 or spot number 7 are the most reliable. Well, I find number 5 a little bit more powerful. So we on spot 5 we got the breakout. We can argue and say, but Vlad, this was 5, fine with me, no problem. Then 6 and then 7 is the breakout. So 5 or 7 is the breakout. I consider that as one wave, but absolutely fine with any view here. So the logic here is, this is an absolutely perfect sell condition with aggressive stop loss here and more conservative stop loss here. And target levels, when you will want to define your target levels, you would go to the previous demand levels and you would plot here the strong demand zone where the buyers already show their interest. Buyers, buyers, buyers. This would be the ideal zone we would want to carry on with for the target. So once again, you got the break here. If you go directly with the break, fine. If not, little retraces. Then again, aggressive stop loss or conservative stop loss, and you want to make sure that by the time you enter your trades, either if it's aggressive stop loss, which is about 36 points, or the peak, which is about 50 points, you want to make sure that your target level would be bigger than that, simply because you want to allow a positive risk reward ratio. This is super important in I would say any sort of management, but especially money management, of course, but especially in trading. Why? Because while technical conditions of the market might vary and change, numbers would be numbers. And your way to control your performance is not knowing some tricks on the chart that others do not know, but is to control your money properly. And I invite you to watch this video on the right side on the importance of maintaining the positive risk reward ratios, and how to make numbers work for you. So this is the second trading strategy, and the little twist here, I would say, or little tips which I wanted to share with you when it comes to valid, reliable range breakout. And the final strategy for today is actually a trade that is still ongoing for us, and I call that join the momentum, right? When we got the waves, you basically develop a trend in ongoing trend. This becomes a powerful momentum. What do we have here on the CAD? And this trade is still ongoing. We reached the first target zone, but the next one is still open for us. What was done here? Let's take a look on the chart. Well, this is the place where we are basically going with the sell. Okay, so what do we have here? Very, very simple. Multi-time frame analysis is key for me all the times, especially when I look to join ongoing momentums. So the weekly chart had a bearish divergence, higher highs on the chart, lower highs on the MACD. For me, it means I am after corrective cycle, which is usually either a BCD or a range. The next time frame for us was the daily time frame, and on a daily time frame we managed to see the break below this rising supportive line or rising range. And as it happens, the market here is making also lower highs, lower lows, so it starts to develop a bearish trending structure, right? Bearish trend pattern. Lower highs, lower lows in ongoing corrective structure on the weekly chart. So we join the weekly chart, and the daily already confirms that. And what happens afterwards is a little bit similar to the euro pound we saw before. We got sequence of lower highs, lower lows with corrective structure. So here I did not necessarily wait for, let me just redraw it a little bit better. I ignore this spike because it's the gap of the weekend, but I didn't specifically wait for the breakout, even though it happened simultaneously. But the logic here is take a look how the breakout happens. Okay, at the end of the three waves, first of all, there is no bullish divergence anywhere. It's lower lows on the chart, lower lows on the indicator, full synchronization. Then we got at least 4 spots similar to what I explained in the euro pound, right? So we expect the 5th breakout or the 7th breakout. But at that point, this is where it triggers my eye. 1 wave down, 2nd wave down, pullback, and boom, it breaks through the low, 3rd low. We recreate ongoing momentum, and we first of all we break the range, but again it was not a trigger in that case. We recreate that by making 3 lower highs, lower lows. So now we have full synchronized structure, price structure on the 4-hour chart that joins the daily and the weekly chart. This is one of the most reliable triggers you would want to follow. Now, as you can see on this chart, we also had major volume profile zone here. As you can see, dynamic zones. This is based on the KTLI indicator of ours. You can find all the information, of course, with the link below this video in the description. This is based on the volume profile, and look at these massive balance levels. Tons of balance here, which means tons of transactions here, which means as long as this zone hold, the balance is the area where sellers and buyers feel both comfortable, but the trending structure is bearish. A sequence of 4-hour daily and weekly to the bearish direction, while the 4-hour chart makes 3 lower highs, lower lows. Again, absolutely phenomenal. So once again, range breakout, even though it was not the main trigger here, but the 3 lower highs, lower lows happen simultaneously. No signs against RSI making its own bearish momentum, lower highs, lower lows. It breaks below the level of 50 to gain momentum. MACD crosses down and opens the gap, as you can see here, opens the gap between the moving average and the histogram, and this is a green light for further continuation. So this becomes our invalidation zone above the last high, and this of course demand level. We want little pullbacks and continuation. You would want to make sure that the risk is smaller than your reward, which again in our case, as you can see here, this is the protection level, right? This is the reward zone. It gives a beautiful risk reward ratio, and once again risk reward ratio is absolute key when it comes to trading and money management. So these are the top 3 strategies that perform best in such market conditions as we've had on February. And I have a little secret to tell you. These sort of strategies would perform on high accuracy for more than 60%, 70% of times, simply because they rely on no magical solutions. They rely on pure price action, classical trending structures, clean sequences of highs, lows, and important levels of supply and demand, and then of course indicators line up together in multi-time frame analysis. That's what I do. That's for me cycle trading. That's for me multi-time frame trading. That's for me the best way to trade. And the statistics we have for over a decade speaks for itself. Yes, there are worse periods, losing weeks and losing months, but over the long run, this method, this trading approach helps to maintain a very high accuracy trading of over than 70%. So that's pretty much it for this video. I hope you find value in the trading strategies. I hope you find them interesting, and thank you for watching. If you are new to our channel, please consider to subscribe with the subscribe button below this video. Please don't forget, hit the like button, and I want to invite you to our trading family, Home Trader Club. Get your access to our trading courses, our real-time trading education, our real-time trading opportunities, so much more. Join our family. The link is below this video in the description. Meanwhile, once again, thanks for watching. Best to you and yours, and I'll see you soon with more. Good trading. Bye for now.